So hi everyone, this is Alok Patnia, Managing Partner at Taxmantra Global and also Managing Partner at ProfitBoard Ventures. ProfitBoard Ventures is the investment banking and private investment arm of Taxmantra Global. We are headquartered in Singapore. We are a highly curated growth stage investment banking firm. We are in the process of creating our own fund and investing into startups, mostly in Indian startups and Southeast Asian startups and fundraising from global investors. And we do regular investor talk wherein we invite global investors to understand their investment thesis and what they do and how they choose investment and invest startups and how do they invest. And it's also a sneak peek into the global investors' mind space in terms of what's happening globally, more so in the pandemic time when and which sectors are they looking to. This investment talk is in association with DBS Bank. And today we have got Rodrigo joining us from Blue Future Partners. It's a fund of funds with decades of experience in venture capital investing. They back emerging managers, focus on early stage technology investments. And they have people-centric and relationship-driven approach with global investments mandate and strong tie-ups with emerging managers. Their focus area is pretty much global, but their focus is US, Europe, Israel, China, and Southeast Asia. Today, Rodrigo has joined us from Blue Future Partners, and I think Rodrigo joined the firm in 2019. He's based in Munich office, and he focuses on implementing Blue Future Partners' direct investment strategy into venture capital. He's an entrepreneur at heart, and I've been very active in the startup ecosystem globally. So with that, Rodrigo, thanks again for joining us today, and we are live on Facebook also, and it will be a very good interaction with, I hope. And to start with, I want you to give us a brief overview with regard to your fund and what your fund does in terms of the investment and the process.
Yeah, look, first of all, thank you so much for the invite. It's a pleasure. So as you mentioned, so the name of the fund is Blue Future Partners, and we are essentially a fund of funds. So that means we are, most of our investments is in an LP capacity into early stage managers. So as you mentioned, we have a truly global mandate. So we invest in the regions you just mentioned. We are also actively looking for new emerging regions, one of them being India. We did a very big kind of market and landscape overview of the Indian market sometime this year, and maybe next year we'll start deploying some capital there as well. Just to have an idea, so I would say around 40 to 45% of our fund investments are in the US, and then the remaining distributed around the other regions. So I'd say 20% around Southeast Asia and mainland China, around 20 in Europe, and around 10 in Israel. So these are all approximate numbers and always changing depending on the new investments. In terms of the broader thesis, in terms of, we are sector agnostic. So some of our funds are vertically integrated. Some others are completely agnostic. So we truly believe venture is a people's game. And so we really try to put most of our focus on the team, both founding teams of the companies and the manager teams, and so the GPs in the fund. So for us, if the manager is a leader in their specific niche or market, we are more than happy to back them, regardless of that of an industry focus or not. I think in a nutshell, that's pretty much it. As far as the thesis, we do target smaller funds, so we focus mainly on sub 200 million early stage funds. So this is seed and Series A, and we do this because we really believe that the smaller funds outperform. So this is a strategy that some other funds in the US have started to follow, and it's also growing in Europe. And the evidence is there that it's more likely for these funds to truly outperform and be, these days in venture, being a top quartile fund doesn't cut it anymore. When you have the S&P giving 15-20% returns every year, being a top quartile VC is not enough. So we really need the top decile and above that even. So we really put a big effort into really identifying those emerging managers. To give you kind of a brief overview of our definition of an emerging manager, I mean, this doesn't necessarily mean a first-time fund. So we do have a lot of first-time funds, and we participate on the first close of the first vintage without any problem. Again, as I mentioned, it really will depend on our relationship with the team at the moment. But we also have some managers that we've been backing since their first or second vintage and that are now on the fifth or sixth. So we really believe that we are long-term partners, and if they maintain themselves true to kind of the emerging manager strategy, so investing early stage and being very hands-on and really trying to help to build the companies together with the founders, we are more than happy to continue to back them through many years and many fund generations.
That's great to summarize. So what's the ticket size in one go? So tomorrow, suppose if you have a manager who really wants to raise capital through your fund, what's the initial ticket size you look into, and what's the time frame, if you can let me know?
So I mean, in terms of the ticket sizes, they depend. So I'd say the typical ticket size is around 1 million. Next year, probably towards 2+ million. So that's kind of what we target. We might make some exemptions, higher or lower, depending on the specific investment. But I'd say that's kind of the most common ticket size. In terms of the process, I mean, our due diligence, we try to be very swift. So I mean, the process is fairly simple. I mean, in terms of approaching us, I mean, we have a very broad global network, so it shouldn't be very hard to find someone within your own network that knows us and that can make a warm intro. That's always the preferred way. I mean, in venture in general, I think. But we also have a lot of investments that were just a cold email on our inbox or via placement agents, just drop-in boxes in our website. So we basically review everything that comes our way, and we're constantly reviewing. I think not 100% sure about the numbers, but I think based on last year, I think we actually saw around 30 to 35% of all venture funds that were raised globally. So that's and out of those we made, I think, around 10 to 15 investments, maybe closer to 10 last year or something. So again, this is a very, very big market, and I mean, 30% to cover 30% or between 30 and 40% of every fundraising, that's really a truly outstanding footprint, and really shows that we have that global reach. But having said that, so we're very diligent. We try to keep the due diligence process as swift as possible. Again, we like to participate on the first close, so we do a very thorough due diligence, but we try to move as quickly as possible, also in the manager's interest.
Yeah. So in terms of the penetration into Southeast Asia, I understand you have deployed some fund in Singapore earlier, but what's stopping you to find good managers in India and invest, considering India has got more than close to 30 unicorns now, and the estimates suggest that by 2025 it will have 100 unicorns. So are you aggressively planning to bring on some of the managers in India and directly?
So to give a bit of background, so in terms of the Southeast Asia, so one of our partners, he actually lived in, I mean, he's back in Germany now, but he actually lived in Hong Kong for over 10 years, working in investment banking and later on in venture. So that was kind of so we had the exposure there, and so that was how the whole basically Asia angle was built and integrated into the portfolio. And we started early on, so we started with just one fund or two funds. So we started deploying slowly and building our relationships there. So again, so first in Southeast Asia, that's where we were based. Then in China, So this year we focused a lot on China, and we did a lot of the same we did for India. So proper market overview of China, and started deploying some larger tickets in mainland China, and continue to do it in Southeast Asia. So I would say India is kind of the natural next step. So these are very big markets and very different from our historical markets, so Europe and the US. So we feel that we should first do kind of a broad overview before starting, and this year was kind of that year for us in terms of India. Again, as you mentioned, I mean, I think India is like the 5th startup ecosystem in the world, and it's rapidly growing. I mean, as you mentioned, I think 5 years ago we had around 5 to 6 unicorns. Now I think it's about 30, and as you mentioned, in 2025 it's expected to be over 100. So I mean, it would not make us any good to neglect that massive growth in India. And again, I mean, it's the amount of talent in India. It's just massive. I mean, again, it's over 1 billion population. I mean, it's one of the youngest population per capita in the world. I think. So I mean, out of the I think you produce around 1 million engineers per year. So that's I think it's 4 times the US. So there is a lot of stuff happening in India. There's still a lot of work to go. But there are a lot of hubs being created, and we see a lot of potential there. So we will for sure next year more aggressively target, so try to execute on the strategy and to start to build the relationships with the managers and the people we identified during the work we've done this year. I'm not sure if we will do one or not our first investment next year in India. That's still to be determined. We are still right now and in Q1 probably defining the portfolio construction that we will be deploying in 21, 22, and 23. So we usually do 3-year plans. So it will probably have a space for India. I cannot say if it will happen already next year or later on, but it's definitely a space we are actively targeting and actively building relationships in the year. But again, as I mentioned, so this is really a person's game, and we really like to get to know the people and build that relationship of trust before actually committing to capital. Because I mean, that's the kind of the beauty and at the same time the constraint of venture. I mean, this is basically people you have to be truly committed on, because you will be in business with them for at least 10 years. And that's just if you commit for one vintage. And as I mentioned, we like to do it for more. So in the space of 5 years, we might have a commitment for 30 if we commit to every single vintage. So we really need to be comfortable and to fully trust in the judgment of the people we get in business with, essentially.
Completely agree with that. I understand that you are sector agnostic in the sense that you really don't worry about which sector investing, but considering automation, which has got accelerated in pandemic at least by a decade, and considering the data consumption, do you have any favorite sectors or business models wherein you say that okay, if this fund or the manager is actually into this kind of funds or this kind of sector, then I think I should invest in. Do you have any interest or any favorite sectors as such?
Yeah, so again, as you mentioned, we are agnostic. I mean, we basically invest in software and technology. So if a company has that kind of angle, we are more than happy to get in touch and to assess the deal. I mean, taking a look at our existing portfolio and to reply to your question, I mean, I would say around 30% of the portfolio it's in enterprise SaaS. So this is, of course, an industry and a business model that we really like, and we became quite experts on it. But it happened kind of naturally. So it was basically with the development of the ecosystem and the portfolio of the funds we backed. It naturally happened. So it was not something that we defined to be okay. Let's do 30% enterprise SaaS. No, this was a natural thing based on the size of the industry and the exponential growth of the industry. I would say, looking forward, something that we've been seeing a lot, and that me personally also think it's one of the technologies that will shape the next couple of years. It's RPA, so robotic process automation. I mean, we saw the most recent decacorn in Europe, which I think now it's either the biggest or I think the second biggest largest unicorn out of Europe, which is called UiPath, which does just that, so RPA. We have some funds that have a large portion of their portfolio in that sector, and we also have some more deep tech and Industry 4.0 funds, namely in Israel, for instance. I mean, Israel, it's kind of the hub for cybersecurity and a lot of deep tech and a lot of very interesting things happening there. So some of our funds there are definitely investing heavily in automation and again, and all of these things that happened that were accelerated by the pandemic, but that were already there. So yeah, I think it's just the natural way of the ecosystem to evolve and the whole technological industry. I think COVID helped a lot in that sense, and we saw some of our funds in New York getting a big boost, also in terms of e-learning. So I mean, to change a bit from automation, I mean, we had some companies in e-learning that had spikes of, I think, increased in over 300, almost 400% in their user base during Q2 and Q3 of 2020. So these were companies that were solid, were in a steady growth path, growing decent double digits, but maybe growing at 20 or 30% quarter on quarter, and that in 4 months had a 300% increase in the user base. So they actually were faced with a challenge, which is it's a positive challenge, of course, but they were, I mean, to scale your infrastructure to handle that amount of increased traffic, it's also a challenge. And I mean, our founders and the managers were actually able to do that collective effort and to basically accompany the growth that COVID eventually brought.
Completely agree. I mean, for many of the founders, it was very difficult to manage the scale which they got during the COVID, and it was very difficult for many of the companies to even manage the kind of growth they were experiencing. So tell me something in terms of, do you also invest directly into startups? Are there any good examples of doing, or you invest only through the funds wherein you invest?
Yeah, so we basically invest out of our fund portfolio. So the way I like to think about it is we essentially outsource the scouting process to the early stage managers. So again, so most of our funds invest in the pre-seed, seed, series A. I mean, some of them just in like pure ideation phase, so just few slides on a PowerPoint and nothing more. And some of them also have a kind of an incubation angle there. So we like to think that we kind of outsource that part of those stages to the managers, which of course we spend a lot of time getting in business with, and we truly believe in them 100%. And are extremely competent people. And then we like to get in at a bit later stage, so I would say Series B onwards, so when the deal is already a bit de-risked. And so again, the reason for this is basically we can boost our returns for our investors, of course, while manage the risk due to the later stage of the company. And this logic has another advantage, which is we at the moment, I think, have a portfolio of around between 600 and 650 companies indirectly, so via our funds. So this is essentially a pre-selected database of 600 plus companies, high potential growth companies, on which we have proprietary information, and that we can actually assess and track during many years, since the first investment through, let's say, 1, 2, 3 years, or even longer. So we basically see them evolve, and what we came to realize is that we can very early on identify which are going to be the outlier companies in each fund. So, I mean, venture is of course power law distributed returns. I mean, that's kind of the standard idea for the industry. Then the conclusions and the takeaways from the power law, that depends from person to person. Me personally, I believe that it is still possible to pick winners, and that's something that we've seen, again, based on our investment experience. And what we've seen is that the company that will be a unicorn at a Series D, it's basically the company that at Series A or Series B we said, this company is really interesting. I mean, they are onto something. I have no problem seeing this company be a 1 or 2 or even more billion worth company. And again, some of those companies that are actually a unicorn now, so I think we have about 10 unicorns in our portfolio at the moment, with at least a few more set to reach that threshold next year. And again, some of those companies that are now at that stage now are the same companies that we were talking internally and that we were targeting already and monitoring while they were still at the Series A. So this, it really is possible to very early on identify these outliers that will in the end ultimately drive the performance for the funds. I mean, to give you an example, one of the most successful funds we have in New York, I mean, they have at the moment 3 unicorns, and I have no problem at all seeing them reach another 3 out of their existing portfolio. And again, and all of those companies return at least 1 times the fund. One of them returns, I think, 4 times the entire fund. And again, and these were companies that while they were at Series A and Series B, we could already see this happening. Maybe not a 4x return on a fund level, but we could already see that that was going to be an outlier company. If it's going to return 1, 2, 3, 4, 5x the fund, that's yet to be seen, and that will all depend. But we can very early on identify that this is for sure a company we should be investing directly on. So, and that's kind of the advantage and the privileged position, let's put it that way, where we're in, which is we have this database of 600 incredibly talented founders and companies, and that again we can of course always talk to our managers, and I mean we talk with them very on an ongoing basis, several times a quarter, to get also their personal input, because they are in talks with the companies on an almost daily basis. So they also, if we can already know that, they know it even better than us. So it's crucial to always be in a permanent contact with them, to actually be able to track these outliers, which is what we do.
Well, very well said and put across. And you have already spoken about the exit, and an exit is so important, and timing is so important, not only for founders but also for investors. I mean, getting into the cap table at the right time is so critical for an investor also, and at the right valuation, and that's where you determine the exit. So I was going through some of the details of your fund and was very interested to know the initiative around ESG. So what is ESG, if you can explain, and what is it all about, and what you all are doing in this?
Mm-hmm. Yeah, so I mean, this is an initiative that we've been planning for quite some time. So I mean, obviously, talking about it in the team and thinking about how we could basically get involved and really add value in that. And I mean, I think ESG overall, it's something that the entire venture community has been paying more and more attention, and not just venture, but the world itself, with also now with the US, with the Black Lives Matter movement and other movements equally important. So this is something that the world, I believe, has been giving more attention, and in particular the venture ecosystem. I think about now around I'd say 40% of venture funds globally already have some sort of ESG practices or policies or guidelines in practice. So I mean, some of them, of course, might send you a 30-page document, incredibly detailed, their ESG initiatives. Some of them might just give 3 bullet points, but they are thinking about it, and already have it in place. And the other 60%, they are thinking about it and they want to eventually put it in place, but they still don't know exactly how or exactly how to do it. And what we realized from looking at this particular thing is that there is not a standardized framework, or there's kind of not a single source of truth on ESG and not what's happening in ESG. So the ultimate goal for the ESG initiative is to be a community-driven goal, to be a community-driven platform, so where everyone can contribute. That's why we actually created as an hashtag ESG in VC, so for people from all over the world and from the LP and GP perspective to be able to contribute to it. The way we decided to tackle it, to kind of launch the initiative, was through an interview series with GPs from all over the world. I think we started off with around 10 of them, I believe. And since we launched the first one, we've had many people reaching out to us and trying to be involved. And so proactively reaching out to us, oh, I loved it, I would love to be involved. Like, I really want to implement that. Do you want to have a call to just discuss what it is you are seeing happening with other funds and other people, and what should I do with my fund, and sharing their own experiences. So I think this is it's been a huge success. I think we launched about 1 month ago. So I mean, I think the first interview was launched a bit over a month ago. I mean, we of course been working on it for a longer period of time. And we still have some very interesting interviews that were already done and are already on the pipeline. And again, we are continuing to schedule more and more interviews. I would say sometime next year we'll probably do a proper document, so proper research paper on what was kind of the overall take, kind of the standardized frameworks and the common metrics that the people we are talking to in the industry are using, and if any, if it's even possible to kind of get with a standardized framework, but we will at least try to do to give our view of what we think it's happening of good and bad in the field. But yeah, I mean, as I mentioned, as of now, it's still very much driven by ourselves, so via this interview series. But our goal is to really have everyone jump in and. Yeah, we're seeing a lot of interesting things. I mean, some people doing a playbook. We also had a recent interview with Miki, so the founder of Tech Founders, who is doing a ESG playbook. So also trying to kind of get some frameworks and some metrics on the topic of ESG. And she reached out to us, trying to, again, be involved. And we were more than happy to collaborate and to evolve. So this was basically just that. I mean, an initiative that... let's kind of our contribution to the ecosystem and a way to give back to the ecosystem in such an important topic as ESG. Okay,
that's great. I got one question from Ravi on Facebook, and he's asking that since you are a global fund, what are the key difference you find in terms of startups which are in Southeast Asia and in Europe, in terms of the technology, in terms of the stage at which you invest? Do you see any difference or any differentiation as such in startups when you invest in different geographies?
So I would say, I mean, one key difference, it's not related to the startups itself, is in terms of the funding. So I mean, Europe and I mean, first Europe and Southeast Asia, China, I mean, India, so the entire world is still in some way catching up to the US, and so shortening that gap. But the gap is still there. So, I mean, the world is quickly catching up, but there is still that gap. So I think it's easier for companies to scale in the US purely by the fact that it's easier for them to get access to funding rounds and to inflated funding rounds and all of that. And I mean, we even have some of our funds who one of their key strategies is to really nurture the companies in Israel and Europe, in this particular case, and to help them scale, and that to make the bridge to the US towards an exit. So to exit in the US, where they can basically achieve higher valuations. So this is kind of the more financial side of the thing. I mean, in terms of the startups themselves, I mean, I do believe talent is equally distributed. So I wouldn't say that founders are better in one place or the other, not at all. I do believe the US still attracts a lot of very talented founders because, I mean, just the ecosystem and that aura almost of being present in Silicon Valley, and it's easier to scale and getting access to all of the big players and everything there. So that still helps. But I mean, we've seen massive examples of extremely talented founders in Southeast. I mean, to give you an example, I mean, Ninja Van in Southeast Asia. So this is a company that's on the track to be a unicorn. They should reach there pretty soon, and beyond. I mean, these were a group of incredibly talented. So it's a logistics last mile delivery company in Southeast Asia. They operate in most of Southeast Asia. I mean, the founders were, again, no different from a founder in the US. I mean, they were working 22-hour days. I mean, in the very early days, they were in the fulfillment center, sorting the parcels themselves. So it's really about the commitment and that entrepreneurial mindset. But I mean, I think in that sense, I don't really see a difference in any country in the world. In terms of the technologies, I would say it's also equally distributed. Depending on the place, I mean, for instance, in Southeast Asia, we've been seeing a lot of things happening around e-commerce and e-learning as well. I mean, I think in terms of e-commerce, Southeast Asia, it's expected to be by far the fastest growing market over the next 10 years. So just again, since the market is growing so much, it's natural that there are more startups taking advantage of that and trying to get on board with the market development. So, and again, it's a market that's way more mature in the US. So we see maybe a bit less activity there than in Southeast Asia. I mean, I think Europe is also doing very interesting things in terms of fintech, especially in Eastern. I mean, obviously in the UK, which is, I mean, London has been the election choice for fintechs in Europe for many years, but also in Eastern Europe, we also have some funds targeting Eastern Europe and Turkey as well. And again, I mean, the fintech and the fintech development there has also been astonishing. AI and RPA, as I mentioned, I mean, especially that has been an industry that, because of UiPath and reaching that $10 billion mark and proving that Europe, I mean, not just the US, but also Europe can produce these multi-billion-dollar companies. So attracted a lot of interest to the space. So we've seen a lot of companies working in RPA and in AI across the region. I think Israel, again, as I mentioned, it's very focused on deep tech, cyber security, and those verticals. But they also have incredibly interesting things in agriculture, for instance. But if I had to say, I think Israel, it's kind of the industry 4.0, IoT, and so some more deep tech kind of topics on a global scale. Actually, not. I mean, I think they are actually ahead of the US in many of those particular things. So I think the US has a lot to learn with them, and there are plenty of synergies that companies that operate in both regions are doing. I think the US is, again, it's the most developed VC ecosystem in the world. So obviously you have good and bad startups, good and bad founders, and operating in everything essentially. So I don't think you see that kind of niche sector focused almost by region as we do, again, in Latvia, having a huge focus on fintech, or Israel on deep tech. So the US is, I would say, pretty agnostic as a country. But yeah, I mean, I think the rest of the world is definitely having incredibly interesting things in very specific sectors. And I mean, there are brilliant teams of founders all over the world. So I mean, the US has nothing on the rest of the world in terms of talent.
I think that was so explained in detail, and thanks for that. And I think with that, we are running out of time. So a closing comment in terms of, and again, thank you for taking out time and spending time and letting us know in terms of what your fund does. And hopefully we'll work together in future. And thanks again for joining us. And we will see how we can bring in more investors on our platform, on an investor talk platform. And with this, I say bye to everyone. Thanks for joining in. Thanks again for joining in, Rodrigo. It was a pleasure taking out time for us and explaining your vision statement for Southeast Asia and for India specifically. And I know that India will be a very good and great market, an interesting market for you, considering we already discussed in terms of the size of the market, in terms of technology adoption, in terms of also the data penetration, which is there in India now. So in India, I think MSMEs and SMEs, they are adopting technology, and we will see a lot of enterprise startups, B2B enterprise startups, SaaS-based startups coming up, product startups coming up. And I think this is a very interesting, next 5 to 10 years will be very interesting for India as a country. And I think we see a lot of opportunity in India, and specifically into smaller towns in India now, because earlier what we used to see, I've just explained this interesting part. So earlier, because a lot of infrastructure was very much into metro cities and Bangalore and Hyderabad and Delhi and Mumbai. But now with pandemic coming in and the data penetration, which is very good, and the infrastructure which has improved, we see smaller plus clutter of startups in small cities, and now they don't need to travel to larger cities to actually start. So I think that's where you will see the bandwidth increasing for startups and tech startups coming out of India. I think again, thanks for joining in. And
thanks so much for the invite. Yeah, I mean, and for all of the people viewing us from India, I mean, again, as I mentioned, we are actively targeting the market, so feel free to just visit our website and reach out. I mean, we're happy to get in touch.
Thanks for this. We will come back soon with another talk. Till then, thanks everyone. Take care and be safe.